Good evening. Once again, it's your boy Rosemary. So today's lesson about liquidity. We're going to talk about not liquidity. I'm sorry. We're going to talk about supply and demand. Yes. We're going to talk about demand. So it's supply and demand, and you have some subtopics under the topic supply and demand. The first topic is the supply and demand zones. Supply. Sorry about that. And the subtopic under supply and demand, which are first one killing supply and demand zones. Supply and demand zones. We have another one which is order blocks. We have inducement. Inducement, yeah. Zone selection. Another the rule for which zones should you select. About the order block, what the supply and demand. Okay. Very refine. After refinement, we touch a little bit on SMC traps. Our topic for today. And so supply and demand, you can just compare it to the economical bias. Or supply is the provision of goods and demand supply that is one and the same thing. Okay, compare. So in most cases, I will just define supply and demand. These are very simple boxes where a lot of orders are placed or are sitting, and generally it's only orders that thing they are the zone, they are placed near the protected structure. Again, so you need to understand for immover price young, as you know, there is a liquidity to fuel the movement. Just like I said yesterday, for liquidity, it is used to fuel the movement. And then with the supply and demand concept, re tsile go tsenela thata mo go tlhaloganyeng gore how does price move from the concept ya liquidity to the supply and demand. Again. So you should anticipate the fact that our price move up from supply to demand. Price moves from supply to demand. It rebalance the price. Just like I said yesterday, for liquidity, but the imbalance is used to balance the price in order it is not balanced. Again, so supply demand also plays that important role. So how do we spot for supply and demand? I'm going to start first with the demand zone. So how go demand zone? You would have something like this. Price moving, and then we have something like a consolidation, and then price moving up. Give a demand zone. We have something like this. This is an uptrend again. This is an uptrend. We have something like this. So what does price do? In a bullish market, we look for demand zone to see where price is going to reverse. The demand zone will generally be just before the protected low. Will be just below the protected low. Let me see, this price was coming from this side. Yeah. This is a place, the protected low is a place where the demand zone is a place where we sweep the most of the sell side liquidity and where we feel the most imbalance on a demand zone. Now we have some movement also now. It's I guess consolidation of some sort. So, and the movement going up. So what do we expect? We expect to the price to come back to this movement. In order, we are going to say this is our demand zone. This is our demand zone. No, okay. This is our demand zone. Again, it's our demand zone. It's our demand zone. So what are we expecting from this kind of movement? We're expecting price to come back to this demand zone, right? To touch it and then go up. This is what we expect from the market. What do I mean by let me start again. Sorry for that. We have a price moving in this way and then up. What we do, we mark our demand zone. Again, just mark it up until this side. This is our demand zone. I'll just label it as D for the moment. And then I say, what do you expect? You expect price to come back to this demand zone and touch it and then go up, right? What do we have somewhere here? We have imbalance. You might have imbalance here. I hope you still remember what imbalances are. So demand zone, it relates or the liquidity that is within the market. We have SSI liquidity of that kind before market or we mitigate our demand zone, then move up again. So how do we spot for a demand zone? The market will move this side. We should see a break of market structure. You should see a break of market structure. I hope you all remember for break of market structure in Musula King. So the one break of market structure before market ota ubola demand zone narrow. The same happens with the supply. The same happens with the supply. We would have something like this. Our price coming and then forming a movement of this kind, then going down. What do we have here? We have our demand zone. My drawing is not that perfect. And what will we have here? We will have an imbalance of some sort, an imbalance, and we expect price to come back to the demand zone, mitigate it, and go down, right? Mitigate the supply zone. Don't mind my drawing is not that nice because I'm using a mouse. I'm using a mouse. So this is how we talk about supply and demand. So I'm going to go to a live chart so that you guys can understand so easily. So we will have a chart like this, right? We have a chart more likely like this, right? Demand zone ke kore tsa nang di buy tsa rona teng. Supply ke tsa kore tsa nang di sell tsa rona teng, right? And we have a price moving from downtrend to uptrend in this direction, right? And we will have our last kind of market movement here. So sorry. Yeah, we have this zone here. Supply and demand, they are the big boxes. They are around the order block. Order block gets an order, get the refinement from supply and demand. Again. So we have a supply zone here. As you can see, it's a very big box, a very big candle. So what do we expect the market to do? Let me say the market was still here. Let me do this. We have price coming essentially from uptrend. This was an uptrend to a downtrend. Another movement outside on below some sort of consolidation. Then a demand zone spotted, right? So what do we say? We say that price will come back to this to this supply zone to mitigate it and go down. A demand zone is only valid after we see a very large momentum of movement on market and a break of structure. So the press button for a break of structure like that, right? And then price coming back to mitigate our supply zone. This will be our supply zone. This will be our supply zone. Again, price always come back to touch this our supply zone and then go opposite direction. The same applies to demand zone. We have price. Let me look for a very good example. We have market moving in this way, and then about reversal. After the reversal, we have this last big candle. We have this last big candle. Now we're going to talk about the demand. We spot we say it's a demand zone because on the buys are not. I'm just going to try and guys, I want more something. I drop a message go much chatting ke on 1 hour actually can. So let me unmute you all before we continue. Okay, no, ke a utlwala gore mathata ke a ba bangwe. So there is a big box like this, the real marker. So what do you expect from this big box after the market o reversa wa ko godimo? We firstly spot for a break of market structure. We had a break of market structure here, right? Price breaking this previous swing point, going up. And after a breakout with a very good momentum like it did here, we are very, very, very sure that it's going to come down to the demand zone, mitigate it, and move in the opposite direction, right? And supply and demand, they are there also to sweep the liquidity. Liquidity is secure. We are going to enter our trades. So we had the sell side liquidity. I hope you still remember for sell side liquidity king. We have the sell side liquidity here. Okay. We have the sell side liquidity here, right? So the demand zones are there to make sure that after the liquidity is swept, it provides us with some form of entry. For the liquidity is swept. Again, the liquidity is swept. In most cases, how now spot your supply zone thing. Make sure that you look for a break of market structure first. For a market break structure with a very good momentum. With a very good momentum. Also now wanna a break structure with a very good momentum. Spot for liquidity. Spot for liquidity. Also now wanna liquidity. Wait for the market to sweep the liquidity. As you can see, market will sweep the liquidity here. Sweep liquidity market will move in the opposite direction of the liquidity. The liquidity was that the price heights and higher, heights and higher, heights and higher. But unfortunately, price has had to break that and sweep all the liquidity that was collected here. So as a sweeper, your demand zone is your entry point. Your demand zone is your entry point, and you move up. Again, that's how demand zone, demand and supply work. So, and again, let's look at the current market movement of 1000, which I have analyzed, though it's taking much long to react. I think it's going to buy from here, going to sell from here. So we have this movement here, guys. We have this movement. This movement is the same as this one, which I've talked about here. We have a supply zone. This might be a signal for you guys. We have a supply zone here. And I said, well, after spotting for a supply zone, look for a break of market structure where there is so much good momentum for no again. We had a break of market structure. Here is the break of market structure. You can take any break of market structure, provided that that break, a very, 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 very huge momentum. You can just take this one. It's a break of market structure. Agree market will break it with this very good momentum, very good downtrend. Yes, smooth. Again, so after our spot for the break of market structure. Spot for liquidity. You have to spot for the liquidity. So if Olivia Center, we have this liquidity. You have liquidity here. This is our sell side. This is our buy side liquidity, not sell side liquidity. Buy side liquidity, right? And what did I say for the house? I also want to buy side liquidity. You wait for the market to take out this liquidity. How is it going to take out this liquidity? Something of this kind will happen. Price will come and sweep the liquidity resting on that trend line again, because these are buy side liquidity. The market will obviously break. House no break. What will sweep the liquidity? All the liquidity that is preventing the market from going up. Market outs and sell outs and sell outs and sell outs and sell. That is liquidity. So Market should break up to sweep this liquidity, and then we are very sure that it's going to go to our supply zone and sell. We are very, 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 very sure of that. The same might happen. The same thing that can happen on this signal is because demand zone. There are two signals in this analysis. Let's take a very good example. We have our demand zone here, right? This is our demand zone. What do we have after the demand zone? Before the demand zone, we had a break of market structure. We had a break of market structure here. This is our break of market structure with a very good momentum, as you can see, very long candlestick. You should take note of that. And then, what is price doing now? What is price doing now? We had the liquidity here. This is the sell side liquidity. This is sell side liquidity. Sell side liquidity. And price, we expect price to sweep all the liquidity that is resting here on the sell side. Here we sweep a nice bar. We expect the market to mitigate our demand zone and then go up. I hope you can see that supply demand plays an important role, obviously, in the reversal or in the mitigation of our point of interest, more marketing. That's where we enter our trades. One thing that I've mentioned earlier, you got the imbalance for a in the mitigation process, yeah, supply and demand. This is our demand again. Let me label it. This is our demand. And in the mitigation process, for market to mitigate. So for the mitigation process. So in the mitigation process, we have to fill the imbalances that are left behind by the market to try and rebalance the market again. So we have this imbalance here. I talked about imbalance yesterday, Molesenia liquidity. We have this imbalance here. As you can see, this is our imbalance, and we expect price to fill this imbalance, and it already did fill the imbalance by this week. Okay, so I say more thing the gap that we see EFD. So what do you expect? We expect price to come to this up to the demand zone and then mitigate it and go up. I hope that really makes sense. I'm going to note down some rules. So I think we'll not note down. That is going to take much of our time. I'm going to tell you the rules that you should follow when you select your zones. When you select your zones. The first rule is the break of market structure. There should be a break of market structure every time you want to select the zone. The same applies to avatar supply zone. There should be a break of market structure first. And after that, after a break of market structure, there should be a momentum shift on a break of market structure. So you have a very good momentum on a break of market structure. That is the second rule. The third rule is the liquidity. That will for sure be swept out in the mitigation process again. So break of market structure, momentum, and then liquidity. After the liquidity, the imbalance. Make sure that that imbalance is filled. Right? Make sure that that imbalance is filled. Those are the first four rules you should put in mind or take into consideration when you select your zones. Right? So now I'm going to go on and talk about other blocks. I hope that was quite simple but great. Got supply and demand. Now we're going on to order blocks. Order blocks. So the order block most bontsi jwa nako, and you should this lesson is going to end pele ke fetsa it's we talk about it. So re ka bua ka order block. So ke tsa ke latele bone most of the time re ntse re order block motho wa tse ipotsa re ka ntse order block ke eng go diragala mo order block. So an order block ke the most refined places tsa di supply and demand. Let me go to 4-hour time frame. So jaaka re itse supply and demand ke the big boxes, that the big boxes where a lot of orders are placed. Okay. So re kgona go refine the supply and demand gore re reng re bate di order block. The order block o be neng the candlestick. Okay. It's like it does make sense now. So if you are going to look, let me take for example, you might have something like this on higher time frame. You might have a very big box like this on higher time frames, right? So we are that order block. So an order block, also remove it from higher time frame to smaller time frames to refine the supply and demand. So we are having something like this. I'm going to mark it with a colored box so that you distinguish it with like this. So this is our supply zone. So when you're going to move to a smaller time frame than this one, so refine, you are trying to refine supply and demand into order blocks. And as you can see already, what changed here? This changed the one candlestick one in the but Hana now we are going to look for a single small candlestick. We are going to look for a single small candlestick or we got to minimize the drawback. The drawback is we minimize rate or lose the trade before the profit. So just imagine what's any entry here, what's any entry here on supply zone without refining it to an order block. Or this drawback might have blown your account, might have killed you somehow. This is one thing that kills us most of the time. Okay. So how to find an order block? Now we are going to look for a single candlestick. So order block in more uptrending. Order block is the last bullish candlestick before the reversal movement. So let me say I'm going to choose this candlestick because I can see here it's our last bullish candlestick before Yakotas. So I'm going to refine it to this candlestick and note a change on our entry. Again, you note a change on our entry. It is much better than non-returning supply zone. Supply zone, you would have to enter somewhere here and you'll be caught up more drawback in. So how to find out to an order block, it becomes much perfect. It reduces your risk to reward ratio to at least a better outcome. You know what I would say, snapper in through motor. Okay. The same happens for demand zone. The same happens for demand zone. But the mitigation process doesn't change. Mitigation process doesn't change. So let me say I'm going to choose my demand zone. Get this candlestick, this big one, right? This is my demand zone on a higher time frame. And if you can look closely here on this movement, our movement to only because this is a 4-hour time frame, this movement can take you out. But if you are going to refine it to an order block or use a time frame, I want a lot of difference. Negative order block, yeah, bullish market get the last bullish candlestick before the opposite direction, and then more bullishing, more bearishing is the last bullish is the last bearish candlestick before the opposite direction. So I'm going to take an example. I'm going to show play out. Let me return to 4 hours. So let me say you take this candlestick SO demand zone, this candlestick SO demand zone, right? When you're going to refine this demand zone over an order block now, you're going to go to 1 hour time frame or any other time frame, guys. It's not like we're going to use 4 hours and 1 hour. Any time frame, even from 1 hour to 30 minutes or from 30 minutes to 5 minutes time frame, as long as what is your risk to reward ratio, you just have to do a top-down analysis. So from 4 hours, you can see how much this movement is and how it affected our entry. Someone would have entered the market here and see the drawback after entry. So if we refine an order block at the demand zone to an order block, so an order block move bearish marketing is the last bearish candlestick before the opposite movement. So when you refine it, you reduce your risk to reward ratio, reduce a little drawback. The difference in entry it's really a recommendable difference. So you can't enter entry mo zoning ye tona zoning. That is the order block and supply and demand zones. We are left with so before we are left with 5 minutes before the lesson in hella. So I just wanna touch something on the advantage the order block. I think I will have to conduct another lesson or later and be able to get some comments, questions from you guys. So advantage the order block. The first one advantage the order block, or you are able to refine your entry, like I told you, and increase your risk to reward ratio, right? And then the second advantage, you are not the liquidity. So just imagine 100 this is our entry. Just look at this liquidity. It would have been the liquidity and net rounds out or demand zone refine you until you increase your risk to ratio. So I know it's any notable liquidity because here we have so much liquidity. That is the second advantage. The third advantage, Kero, you feel the maximum imbalance. You feel the maximum imbalance. When you have an order block here, we have an imbalance here. Here we have an imbalance. So this imbalance is going to be filled rather than in your entry here. So imbalance here now, the way to fee. So that is the third advantage here. You refine demand zone into an order block, supply and demand into an order block. The fourth advantage, I think, or you sweep all the liquidity. I know it's any entry, Hannah. This is your demand zone, so I'm going to buy from here. This liquidity is not swept. So let's for sure liquidity way. So how to find it to an order block? That means we are going to sweep this liquidity, and then we are very 100% sure or 99% sure or we are going to enter our trades after we sweep the liquidity. Okay. So the last advantage of order block, or it creates big movements. It creates big movements. Let me go back to 4 hour time frame and show you. We are here on a 4 hour time frame. So how to supply and demand, you are going to catch very small movements in marketing other than how refine now there is a order block. So let me say you have your demand zone here, right? And you buy from here. You want to liquidate in market or drawback, but your profits are going to be very small, right? as compared to motho e gore wa refiner to an order block. A ba batla an order block, a refiner that demand zone to an order block, a ba tsena entry. The difference between those and entry is because you wanna a very big movement to catch. When okay, say a very small movement. That is the last advantage here, the order block. So after this, I'm going to host another lesson to complete this topic, because re setse ka go bua ka di-typing yana tsa order block, go setse ka go bua ka inducement, setse ka go bua ka SMC trap. Okay. So I'm going to create another lesson. So I'm going to open you can unmute your mics if you have anything to say or anything to ask in a 1 minute time.